everyone, I have a really exciting dividend stock video for you today. This is the second video in my brand new Hidden Gems series. In this series, I am servicing amazing dividend stocks that you have probably not heard of before. And so in my last video in this series, which I will link to in the description below, it was for a company called RPM International, and they make a lot of really cool products that you've probably run into at your local hardware store. Today's video, actually continuing that line of thought, I'm going to share yet another company that you've probably come across at your local hardware store. How many of you know that WD-40 company? It's a publicly traded stock, and it's a really, really solid dividend stock. I am going to be analyzing in great depth today. I'm going to go through some fundamental analysis. I'm going to go through their balance sheet. I'm going to go through their income statement. I'm going to go through their business model and my thoughts on this company in today's video. Before we get started today, please give the video a thumbs up. If you love dividend investing, if you love these videos that I produce, your support means the world to me. And also, please put in the comments section below if you use WD-40 like I do. I love this product so much. It's an amazing product. I can't imagine not having this product. And so this dividend stock, it is really enticing. Get ready for today's hidden gem. Let's get started. All right, everyone. So I want to just share a quick overview on WD-40 Company for those of you that don't know about it. Most homeowners, or even if you're not a homeowner, most people these days, somewhere in their garage, in their utility closet, somewhere around their business, somewhere around their house, they have a can that looks like this. Now, I like this water-resistant silicone version. The classical WD-40, it comes in more of a blue can and it has like a red top on it, but this is the WD-40 specialist version. And again, this one is really water resistant, which I like because I mainly use this product for outdoor applications. And what is so great about this product is it has many uses, but it is primarily good at dealing with rust and also with lubrication. And so if you have a lock outside that gets jammed up, you're having tough time getting the key in there or getting the lock to hinge or unhinge, just opening up this can and spraying it in works wonders. It preserves locks. It allows locks to work for a very long time. You may think, oh, I have to replace this lock. It's broken. Nope. WD-40 comes to the solution. And also with outdoor hinges and gates, things like that. This one in particular is really good for lubrication. It's the silicone one. So I really, really like this product. And they've been in business a while. And what's so interesting about this company is it's a global business and they have a variety of different products and brands, and they've made a number of strategic acquisitions. But I was looking through their annual report, and still the vast lion's share of revenue comes from their single source or their single main product, which is WD-40 and all of the variations of WD-40. So I want to share on the screen right now some statistics, some fundamental dividend investing statistics about this company. So check it out right now. And what you see here, first and foremost, is this company is trading under ticker WDFC. Its price per share right now is $185 and change. And just to show you something, the price per share for this thing just about 10 years ago was $36.89. And so when I apply a 10-year compound annual growth rate, it's about 17.5% per year annual return on average. So on average each year, this company tends to appreciate in share price over the last 10 years by 17.5%. And so off the bat, I want to classify this company as a grower. This is a growth stock within the realm of dividend stock investing. This is a stock that has had rapid share price appreciation, and it's had that because the company is growing. It's not a steady Eddie company. It's not really a high yield company. This is more of a grower. And so I want to set that scene off the bat because someone who may be retiring tomorrow, someone who may need immediate cash flow, this probably isn't the company, but someone looking, say, 30 years out or even looking multi-generationally, this could be a really interesting selection. So let's keep moving on. And the dividend per year is $2.68. And so the starting dividend yield is only 1.45%. So again, this starting dividend yield off the bat, it is not going to pay anyone's bills unless there is an amazing amount of money deployed. However, the dividend does tend to grow over time. And so if you look at the dividend from July of 2010, it was $1. The dividend per year annualized right now is $2.68. And so the 10-year compound annual growth rate on average of the dividend is 10.4% per year. This is ahead of my benchmark. My benchmark for the stocks that I own, I like to have stocks in general that raise the dividend like clockwork about 7% per year. This company is exceeding it. It's exceeding it by several percentage points, and it is raising the dividend on average by 10.4% per year, which is fabulous. Now, will that continue in perpetuity? Probably not. It will probably slow down, as will the share price appreciation. Those are things to factor in mind because it has already grown so much. And will it continue? Will it not? I think the good fortune will continue, just not at the magnitude it has so far. But we shall see. Maybe it will. And so moving on, I just did a quick analysis here. I said, well, what if the dividend continues to grow by 10.4% per year? What will happen after 10 more years have passed? What will it look like? And basically what happens in 2030 is the dividend turns into $7.21 per share. And so if the dividend in 2030 is $7.21, and I take the $7.21, I divide it by the share price now, which is $185.33, the yield on cost in about 10 years, one could expect it to be about 3.9%. And so the reason I highlight it is it's still not that high. So even after holding this stock for, say, 10 years, WD-40 company, yielding about 4%, there's a lot of stocks I can buy right now that yield 4% off the bat. And so again, for someone who's looking to retire and live off of dividends tomorrow, this may not be the best stock. But for someone who has a really long-term vision, I would say the minimum for this, for a dividend cash flow perspective, if you're looking at it as a stock, hey, I want to live off of the dividends from this company, 10 years is probably the minimum holding period. But even after 10 years, the yield on cost, it is not that high. And this is assuming they can keep up this dividend growth rate. So again, it's something to keep in mind, but that's why I said this is a very long-term type growth stock. So moving on, and let's look at the EPS. So the EPS on this stock for 2020 is expected to be $4.11, $4.72 in 2021. So that puts the current PE at 45, or the forward PE, I guess, for the current year at 45, the forward PE for next year at 39. And so obviously this is very richly valued, and it's valued for the growth that the company is experiencing because the earnings are growing so much. Because the earnings over the last 10 years, when we look at the historical data, have grown 17.5% per year, the market is valuing this at a very rich PE. And you will see in a minute as well, I'll go into it, that this company, the revenue grew right through the Great Recession. And so this is a company that is very stable, and I think it's being priced as such. And so moving on, the payout ratio is well managed, 65% range this year, 57% next year. So thankfully, the dividend payout ratio is not too high. There's room to increase it, especially as earnings increase. And I did another model here. I said, what if the earnings continue to grow by 17.5% for the next 10 years? Well, if they do, in 2030, the EPS will be $20.62. If I take the current share price and I divide by $20.62, that brings the 2030 forward PE in at an 8.99. And so I don't even know if the earnings will be able to increase that much in perpetuity into the future, but it gives you a sense of why this thing is trading so high. It's trading at a really high PE now because the earnings are growing quickly. And as the earnings grow quickly, they'll be able to raise the dividend, and that future PE will come down, that PE on cost, if you will. And so Again, I don't know if earnings will grow 17.5% for the next 10 years per year on average. Actually, I don't think it will. And so I think that 8.99 PE, price earnings ratio on cost, it's probably about the lower end. It's probably going to be somewhere, I'd say, between that and a 15 on cost when we're out at 2030. And so again, I would say the minimum holding period for this thing is probably about 10 years to see any kind of meaningful value on purchases that are being made today in 2020. That said, I know a lot of investors here have a long-term time frame, and even if the investor themselves doesn't, a lot of investors here are looking multi-generational. They're looking for future generations, and I think a product like this, it's here to stay. This is a staple of the household, now of the global household. We'll look at that in a minute. In fact, I want to share that on the screen with you all right now, so check it out. And by the way, the market cap of this thing is 2.5 billion, so there's a lot of room to increase and grow. It's a small cap. But check this out. Americas are 46% of global sales, and so that means that over half of global sales are outside of America. And so this is a global company. And so households all throughout the world, businesses, repair shops, they use WD-40 and they rely on it. And so Americas grew 1% in 2019. So the Americas are growing a little bit slower. That's something. This is revenue, by the way, revenue growth. EMEA, Europe, Middle East, and Africa represent 38% of global sales, and that grew 6% in 2019. And then Asia Pacific, which includes Australia as well, represents 16% of global sales, and that grew 6% in 2019. And so what you see right here is this is a global company. I love that. I'm a global investor. I tend to love companies that represent global diversification, and even being a small company with a relatively slim focus. Like I said, they have other products, but 90 or so percent of sales, they're coming from this, the staple. This is a global company, even at 2.5 billion market cap, which I like. Also worth noting, being only 2.5 billion market cap, this is a smaller company. It's kind of easier to understand this thing and read through the reports, know what's happening with it. And so that's another plus of having this small cap. And now moving on, I also want to just quickly look at some metrics as it pertains to margins. And so the gross margin is 55%. So the cost of producing these cans is not too high, a good gross margin. So what gross margin represents is when you take out the cost of producing the product, what kind of margin are they making? 55%. Now, operating margin comes after sales, general, administrative. That's coming in at 19.5%. So good operating margin, and net margin after tax, bottom line margin 13.2%. But it was weird in 2019. There was some weird tax stuff going. So it looks like on an average year, the net margin might be even better than that. And so good margins all around. I like a strong margin company. And so what I want to do now, I want to share on the screen really quickly some trends that I'm seeing with the WD-40 company. I got this from one of their investor presentations, and what it shows is the maintenance product revenue. And so maintenance product basically includes WD-40 multi-use product, WD-40 specialist, which is the one I showed with the silicone one, WD-40 bike. They make this for bicycles, hey, if you're in the biking community, you like bicycling, put a comment below and let me know if you've ever used WD-40 on your bike chain, on your bike parts. I'd love to hear. That'd be really cool. And so share that in the comments below. And quite frankly, if you use WD-40 or you have it at your house, there's a lot of uses for this product. Put in the comments below, how do you use it? I use it again for locks because I have some locks outside that rust out from time to time, and I need to apply WD-40. And I also use it for like gates and hinges, things like that. Let me know what you use it for. I'd be really curious. Share in the comments below and leave a thumbs up if you like WD-40, if it's a product that adds value to your life. And so anyways, if you look at the maintenance product revenue, it's even through the Great Recession, each year you look at this, it's up and to the right. It keeps growing, and it shows here that their compound annual growth rate is 6.7% over this period from 2005 through 2019. And so really strong. I don't think I see a down year in there. And this is why this company is priced to perfection. It's a really stably growing, slow and steady wins the race kind of company, which is really cool. And so I want to share on the next screen now. Check it out. This was another chart that was from their investor presentation, and this is for strategic brands. And their strategic brands include WD-40 Multi-Use, WD-40 Specialist Bike, 3-in-1, GT85, 1001, Lava. Lava is a hand washing product. Solvol, Novak, and Spot Shot. Put in the comments below if you use any of these products other than WD-40. If you've ever had experience with any of their other products, I'd be curious to learn. But again, it seems like through the strategic brands and the maintenance brands, there's some overlap. But the main reason, I don't need to get into all the details, the main reason I'm showing these two charts is they represent the business, and you can see here on the strategic brands as well that they're growing. And I don't see a down year, even during the Great Recession and up and to the right. It keeps growing. And a lot of this growth has been fueled through global sales, obviously. More than half of sales are coming overseas globally, not in the Americas. Will that continue? We're facing a financial crisis now because of this pandemic. Will this company thrive and continue to grow during these next few years? Man, that will be interesting to see. Right now, it is certainly priced as such. So with that being said, I want to move in really quickly to the balance sheet. So check it out on the screen right now. And what you see with the balance sheet is, I'm going to go real quick here. Assets are $300 million. Liabilities are $157 million. You see a balance sheet here that is very healthy with a lot of shareholders' equity. Basically, assets minus liabilities, you have about $150 or so million left over, roughly. And so what's so interesting to see here is that debt, long-term borrowings, it is only $60 million for a company that is worth $2.5 billion. And so, and they have enough cash on hand right now to pay off roughly half of those long-term borrowings, although they need probably some cash left over just for day-to-day operations. But what you see here off the bat is a strong balance sheet for a small company, not over-levered, not taking out enormous debt to buy back shares. And so I like that off the bat. Moving on really quickly, I want to share the income statement next. So check it out on the screen right now. And what you see with the income statement is that, again, this is really solid. Net sales, this is only showing a few years here, but they keep going up. 380 million, 408 million, 423 million. Slow and steady wins the race. In their annual report, by the way, and both of these I pulled from their 2019 annual report, the CEO talks about this being a slow, methodical, steady type of operation. And the CEO also represented that this operation is about the shareholders and rewarding shareholders with great returns. And the other thing I saw emphasized was a focus on the core. I think that's really good. They talk about the circle of competence, which is they actually quoted Warren Buffett in their annual report. I don't know if Berkshire owns shares in this or not. It's probably too small for Buffett to have any meaningful stake unless he has bought the whole thing. It'd still be probably too small. But they talk about Buffett's concept of circle of competence, kind of stay within your swimming lane, stay at what you're good, and how they try not to get too distracted from their core product because they believe there's still a lot of value in growing the core product. So I like to see that. And they also talk in the annual report about a love for their culture. They call it their tribe, their employees. They're really serious about that. I think that's important, especially at a smaller company. At a bigger company, quite frankly, it can sometimes you get so many people and so many systems, it can kind of run itself. At a small company like this, people are really important and each person makes a difference. And so I'm glad to see that they take their tribe very seriously. But let's go back, talk about the statement of operations a bit more, or their income statement, if you will. We talked about gross profit. It's really high, so the cost of producing these products is not too bad. SG&A is pretty big, as it is, I'd say, at any company. These days, they stressed in their annual report that they actually have a really unique distribution platform, and they feel that their distribution of their products is different than their competitors, and they're proud of that. I didn't get into much more detail than that, but I thought that was interesting at least to take note. And so what else? You can see here, I already summarized some of the margins, and so that's kind of what matters. Why are the EPS down in 2019 versus 2018? I think some of it is just this weird, something weird going on with interest expense. And more than that, there was something here as it pertains to provision for income taxes. And so the income taxes, there's something wacky happening between 2018 and 2019. 2018 was just a special year, I guess. And so anyways, short-term stuff. But if you move up a bit, yeah, the EPS is down year over year. But if you move up and you just look at income from operations, it's up 75 million, 78 million, 82 million. And even if you go down to income before taxes, it's up 74 million, 75 million, 80 million. So again, something happened with taxes in 2019 versus 2018. That's why the net income's down a little bit. That's why I was saying the net margins for 2019 might be even a little lower than they otherwise were. But when I look at this income statement, revenue looks good, operating income looks good, income before taxes looks good. Taxes can be weird year to year. Things are always changing, especially when you're making acquisitions and such. All right, everyone. So those are my thoughts on WD-40 coming. Now, at a high level, I just want to share something. A lot of people in the community right now are asking me about Intel. Ian, what do you think about Intel? This is the type of company I like to invest in because, yes, you need to innovate. And if you go into their annual report, they talk about innovation because this little stick here that you put in it to get the WD-40 into like a small space, like the lock or the keyhole, you use this. And it used to be that it was taped to the side of the can, and you have to kind of put it manually. Now they have this thing, I think they called it like the smart top, where it just flips. It flips open. This is the kind of innovation they're doing at WD-40 Company. But it's something cutthroat like semiconductors. The kind of innovation just to stay in business is a very different type of innovation than WD-40. So for me, as a dividend investor, long-term buy and hold forever dividend investor, I prefer to invest in companies like this because I believe they have a lot, it's just easier. Why invest in something where Intel, for example, they're always going to be fending off competitors. They always have to have the best chip. They always have to innovate. And a consumer doesn't really even care if their product really has Intel. I know they have the whole Intel Inside campaign, and they try to build some attachment and affinity with the end consumer. But ultimately, consumers, they're not buying Intel chips. They're buying a product, and they're oftentimes buying the product from a computer manufacturer like a Dell or an Apple, for example. And so for me, basically, I'm just taking note. I talk about Apple because I got to disclose that at the end, but I own Apple. But anyways, for me, Intel, it's kind of like a commodity type middleman business, and that's okay. But when the competition is so cutthroat, and when things are changing so quickly, and there's not necessarily the brand loyalty like there is with this thing, where there is this, everyone knows what WD-40 is, or most people, many people, they've heard of it before. It's just different, and that's why I like to invest in consumer, non-cyclical consumer companies that consumers need all the time. Talked about these at length on my channel, and why historically I've stayed away from companies like Intel. Now, I do own Apple, which is a tech company, and they have a lot of reliance on the iPhone, for example. And if something changes with the iPhone, which very well could, if we move to new technologies in the future which displace the iPhone, hey, my investment is at risk there. But even if all that kind of stuff happens over time, you think, what's happening with WD-40 in the meantime? Up and to the right. One of these stable companies that consumers need. It's probably not going to get displaced by a competitor. It's worked for many years. Consumers are loyal to it because it works. And it's just one of those sweet businesses that makes my watch list. Now, I don't own any WD-40. It's solidly on my watch list. I probably can't rationalize adding it as a 47th position here because I already own too many stocks. That being said, and I need to focus, and I have to force myself to focus on my core stocks that I've been talking about here on my channel so much. But this is solid on my watch list. I like this one actually more than RPM International. I like it because the margins are a little stronger than RPM, but I love RPM as well. These are two hidden gems that I've covered so far. If you like the Hidden Gems series, please share in the comments below. Please give me a thumbs up. If you want to see more videos like this on hidden gems, kind of companies, dividend companies, many people or most people haven't heard of before. Well, maybe they've heard of the product, but they didn't realize, oh my goodness, that's a dividend stock. Give the channel a thumbs up. A like means the world to me. And Share in the comments below if you own WD-40. But again, just to summarize, I like it. It's solid on the watch list. I could see myself owning this one day. If I were just starting out and I had a really even longer term time horizon than I do now, I would really be considering it. It's certainly not a value though, but it's a solid, sweet company, and I think they're going to continue to thrive. And on the topic of Intel, I'm not going anywhere near Intel here. It's just not for me, but I wish all the dividend investors in Intel all the best. That being said, if I were in a hypothetical situation, say I owned some Intel, I buy and hold forever. And so despite the drama they're facing, some of the challenges with producing their, I think they called it N7 or something, some of these smaller chips that it seems AMD has that under control, Intel doesn't. Would I sell Intel? I don't know. I probably wouldn't. I buy and hold forever, so I rarely sell. That being said, I don't own Intel. I'm not going to be buying any Intel, but I wish everyone in Intel all the best. But the reason I'm even bringing up Intel is honestly, I don't even know that much about it. I'm not passionate about it. I'm passionate about things like this. I'm not passionate about Intel. And so that's another thing. You got to invest in your circle of competence. And my circle of competence is stuff like this. But the reason I bring up Intel again is all day, every day. I prefer just to invest in stuff like this. I love these types of companies, household brands. That's how I do it. If you enjoyed the video today, please give me a thumbs up, like, subscribe. I'm now on Patreon. I'll link in the description and pin comment below. Bless you, all my generous patrons supporting me. It means the world to me. It makes a big difference in me running this channel because there are a lot of costs in running this channel. It means a lot. Thank you. Truly, thank you. I also have cool merch. Check it out. I'll link to it below. In terms of full disclosure, I am long Apple, ticker symbol AAPL. I own that in my personal dividend stock portfolio. I don't think actually I mentioned any other ones I own today. In terms of a disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Investing in the stock market, it carries tremendous risk. Just sharing my journey here for fun. I love you all. Hit that like button. I'll see you in the next dividend investing video.